So I think we'll actually break down probably in the next month. I'd be very surprised if we hold up within the next month, but I expect a real bottom to be. Yeah, so today we heard that they did raise interest rates by 50 basis points, and I think the key was going into today, the market was really nervous. We saw Bitcoin being a little jittery right at the low end of a channel that it was in, kind of touching it, deciding whether it wanted to break down. And the same thing with the stock market. We've seen a lot of selling pressure recently, and the market was kind of thinking that, and going into the kind of announcement that it was going to be a 10 out of 10 in terms of hawkish. So again, think about 1 to 10 in terms of hawkishness. The market was like crazy hawkishness, and 10 out of 10. And then they came out and they were like an 8 out of 10. And the market was like, like breathing that sigh of relief. And then off to the races, everything went. Risk assets, stocks, commodities. We saw surge, gold and silver, and of course, cryptocurrency. I mean, Bitcoin had a monster move from basically a low today of around 37,500 all the way now trading just below 40,000. So I think it's basically a short-term reprieve. I think the markets were just overly tense and nervous about this statement. Now we're through it for a month. I think we have another meeting in a month from now where they'll probably raise another 50 basis points. But at least for now, the market is rejoicing that it wasn't the worst case scenario. At least in the short term, it doesn't seem like the markets were pricing in the slightly less hawkish nature of it. And that's why we got such a big relief rally. Like I said, I don't think I'm looking at the market and I see just bearish pattern after bearish pattern. I see the potential of what rate hikes do to an economy, which is slow it. So again, for me, I look at it and say, okay, this is just the chop and the crazy moves of a bearish market environment. But ultimately, I think you maybe get a few days to a week of a rally, and then we probably start heading back down as smart money starts to say, okay, this is our chance to take profits again. Let's unload, and then it'll drive the market lower. So basically, here's your chart of Bitcoin. And you can see today you're having this beautiful bounce off this lower end of this trend line right here. But the bottom line is that the bigger macro pattern remains bearish. And what I mean by that is that if you look at this down move from the $69,000 high to here, notice that everything's staying within this range. And I think the last time we talked, we were in this range as well. But basically, this pattern is known as a bear flag, or an in spirit of bear flag. And if you look at 100 of these patterns, you're going to see that 80% of them break to the downside. So as long as probabilities are still telling me that, I have no other alternative than to be kind of still bearish on it. I still think that if the Fed is going to follow through on the hiking that they're saying they're going to do, and if inflation is going to be a thorn in their side, which means they'll have to continue to hike, then it means risk assets will ultimately get decimated. Cryptocurrencies, in my opinion, are that perfect example of like a .com era type scenario where we have to see a lot of these things wiped out. Not Bitcoin, though. Bitcoin won't get wiped out. In fact, it'll rise and be much higher in 5 or 10 years from now. But I think in the near term, you have to see that asset flush out. You have to see the .com flush out and debacle like we saw in kind of around the 2000, 2001 area, which mimics again. I mean, we were coming out of this crazy big market move with these crazy moves in the .coms back then. And then what did the Fed do? They started to tighten a little bit because they were getting nervous about inflation. And again, we saw that risk asset collapse. And so I think that has to happen with Bitcoin, for me at least. Yeah, so the one thing as a technician is that it's basically in the range until it's not, right? So we don't necessarily know. I mean, maybe it comes up to this midpoint here, which is around 44,000. Maybe it even has an amazing run to 50,000. But the key is, all we know is that when it breaks, that's where your next big move to the downside goes. And I think minimally we're going to like the 29,000. My projections put us at least down to 20,000, maybe even lower over the next 6 to 12 months. And let me just talk a little bit about my time frame, because you asked me about time frame. So the way I'm thinking about time frame is looking at previous cycles on Bitcoin. We know that Bitcoin was around in 2000. It started in 2009, and it topped out in 2013, then in 2017, and now in 2021. So it's a 4-year cycle. And if you look in between those cycles, from the high to when it bottomed, it was about 12 to 18 months. So the idea is that if this was your high, and let's say 18 months out, we've bottomed out, well, we're about 6 months or a little bit more than 6 months in. So it leaves us about 6 to 12 more months before you really have a major bottom in Bitcoin. So again, there's always a method to the madness. And I always like to explain that, because a lot of people out there, they just give these arbitrary kind of thought processes and don't explain, or maybe they just come up with that out of thin air. Everything I do is very meticulous in terms of looking at past history, looking at the cycles, looking at the chart patterns. So I think we'll actually break down probably in the next month. I'd be very surprised if we hold up within the next month, but I expect a real bottom to be put in, meaning whether it goes to 20,000 or 18 or 15 or wherever it ultimately bottoms out, I think that'll happen over the next 6 to 12 months, which then would put that in the same time frame as previous cycles bottoming out. And then I do think, again, whether it goes to 20 or 15 or 10 or whoever knows, I do think 5 years from now it's at 500,000. I think there's so much upside, as it continues to see adoption. And even in this bear market, we have to take note that there is lots of positive news for cryptocurrencies and Bitcoin. I mean, there's more adoption, more big money starting to kind of be persuaded that there's a future to it. We see more countries kind of adopting it as a form of kind of a reserve currency. So there's lots of positives out there that are forming. It's just that in a bear market, there's too much fear for that to have a positive impact, but eventually it will build and have a positive impact. What we've been doing in the service, verifiedinvestingcrypto.com, is basically just buying support and selling resistance. So believe it or not, I think I've done about 43 or 44 trades since I launched the service in November. We have one loser out of 43 or 44. I'm not sure how many, if it's which one it is, but we only have one loser of about 2%. And all we've been doing is, I think probably 40 out of the 43 have been long trades, which you might look at this chart and you're like, wait a minute, how the heck are 40 plus trades longs or buys when it's been going down? And the answer is, it's just, I've been simply playing support levels with members. So for instance, we had this key level over here, you buy it here, you basically sell it here. Down when we were here, we were buying these levels every single time. In fact, today on this pop, we had Matic, Polygon, we were long Polygon, and we had Avalanche, and I did take profits. We took about a 15 and a change percent profit on Avalanche and about 13, almost 14% on Polygon. And all it was basically playing the support line here and just saying, okay, based on that, let's see if we get the bounce. And the charts have been so amazingly accurate in terms of dictating bounces that we've been able to really knock it out of the park. So again, same thing. I shorted Bitcoin up here, and you could see what it did. It pulled back beautifully here. So it's really given us some amazing plays, even in a bearish market environment. We've seen last year we saw such crazy moves on the alts that it's hard to imagine that they'd have another big move, especially with the Federal Reserve tightening. And I think this is the biggest thing that investors need to just understand, is that you basically had an environment where the Fed had interest rates at 0 and were printing trillions and trillions of dollars. So Bitcoin and all the altcoins could just do amazingly well. It was like free money just flooding into the market. Well, now they've kind of done the inverse of that, where you're starting to see a tightening of monetary policy. So it's very hard for risk assets to get a big move to the upside in this range. Right now I have a bunch of longs, stocks like Zoom and stuff that have just been absolutely, crushed from their highs, where they've made this low pivot here. If you guys can see this, we had this big run, and now notice how it's taking so long and it hasn't even taken out that low. So you basically have a trade here on the long side on something like a Zoom, where as long as it doesn't violate and confirm below this low, you just play the chart here for a bounce back up. So again, there's a lot of good opportunities in the near term, but when you look at the NASDAQ and you see this type of chart, I mean, this is not a healthy chart where you have this kind of mountain peak here with little smaller peaks here. It's a very bearish, bigger macro pattern. And what I love to show investors is that if you look at the S&P 500, and I got a bunch of day trading lines on here, or swing trading lines, but let me get rid of some of these. So if you look at the Fed, so going back to 2009, the Fed started to basically print money, and it was called QE back then it was a QE2, then it was 2.5, and basically all the way through COVID. And you could see how the market was in this very solid uptrend for a long period of time. That there was more printing of money done in the next 6 to 12 months than we have ever seen, even in multiple years of QE. And that basically put the market on this steroid move. It was just nuts. It was like injecting tons of steroids into the market where we ripped higher. Well, now you're seeing that unwind because the Federal Reserve is now taking that away. So in my thesis is this year, we're going to get back in this range as the Fed fully unwinds that. And we know they're reducing their balance sheet now by 95 billion. They've taken away the quantitative easing totally, and they're raising interest rates to combat inflation. So in my world, I just think very logically, no emotion, just say, okay, when the Fed was printing and doing everything they were doing, it pushed the market up because it was more liquidity in the system. Now they're doing the reverse. So it makes sense that in the very least, we should come down into this longer term trend on the S&P. I'm not a big long-term investor. The only long-term positions I currently have are in the physical metals. So I have physical gold, physical silver, because I view those as like an insurance policy. Like you know, and people always call me crazy, but if like I woke up one day and like the grid was down and I couldn't get any money out of the bank and you know, the ATMs didn't work and you know, you had a scenario where your credit cards don't work, well, at least I have gold, right? I mean, I can protect my family, do whatever I got to do, and like chip off a little gold to buy some bread. But aside from that, when I have my macro view that we're probably entering another period over the next couple years of like 2008 and 2000 and early 2009, where we're going to see 50, 60% downside and maybe even worse, bordering on like 1929, 1930s, you know, it's very hard for me to say, okay, well, even if I hold long term, this will be okay. Now, you might be right on that, where, you know, maybe buying Apple here if you hold 10 years, but it's hard for my brain when I think to myself, well, I think Apple's going to $95, but let me buy it at $150. It's like, well, why wouldn't I just wait to 95 or at least wait till closer to 95? So for me, it's much easier for me to be a swing trader where I get in, get out with like 5, 10, 15%, and then I just do a rinse and repeat on that. And I've been able to make much, much more money by doing that in this environment. So at some point, yes, like just like with Bitcoin, like I'm a shorter term trader on Bitcoin, but when Bitcoin gets down to where I think it's going to be like a major cycle low, that's where I'll start doing what I do with gold, which is putting aside a good chunk in Bitcoin and just leaving it there because I think the upside is massive.